So let's look at this financial position and see if we can actually adequately assess them in terms of the nature. So what I'd like us to do is to assess them in terms of the type of financial instrument they are, and then also in terms of the nature that they are. So for example, if you are saying cash, what's the type of financial instrument that it is? Cash is a financial asset. Then the next question is that what's the nature? The nature is that cash is a debt instrument. And then the last thing is that it is a non-derivative. So that's how we answer this. As we move on to the next page where we deal with the answers, I'd like you to think about the answer first before actually, just make a pause your screen and try and answer it before you actually look at what the answer is. Okay, so the first one is accrued salaries. So pause this now and think about it. In terms of the type of financial instrument, is it a financial liability, a financial asset, or equity? So that's the first thing. And the next thing is that what is the nature? Is it derivative? Is it non-derivative? And the last thing is it a debt instrument or not? Okay, so accrued salaries. So accrued salary means that the company is owing salaries, and because of that, the type of financial instrument that it is a financial liability. And because there is no dependence on any underlying factor, it's a non-derivative, and aside that is a debt instrument. Did you get that? Okay, so let's try the second. The second one says corporate bonds held. So pause this and try to answer. Okay, we're back. Corporate bonds held. So when a company holds corporate bonds, what that means is that the company has bought corporate bonds. And so what they have bought is an asset, right? That means that what they have in terms of the type of financial instrument that it is a financial asset. Now, when we come back down to nature, we are looking at the fact that, oh, is it a derivative or a non-derivative? In this case, a corporate bond that is held is a non-derivative because we have not mentioned the fact that it changes based on an underlying or whatnot. Yeah, so what you have is a financial asset that is a non-derivative and that is a debt instrument. So it is either is a debt instrument or an equity instrument. But in this case, it is a debt instrument because we are not saying anything about equity here. Okay, so if you look at our answer, what we have is non-derivative debt instrument that is a financial asset. So let's try the next one. Share premium. Take a pause and try this. All right, we are back. So share premium, is it a financial asset, a financial liability, or equity? Share premium is an equity. Okay, so is it a derivative or a non-derivative? Take note, share premium is equity, and so equity automatically will always be a non-derivative. Okay, so non-derivatives and equity. That's about it. Then the next one is unfavorable currency swap. Take a pause and try this. All right, we're back. Unfavorable currency swap. We mentioned earlier that when something is unfavorable, it is tending towards what? A financial liability. And so what we have in terms of the type of financial instrument that it is a financial liability because that's an unfavorable currency swap. A currency swap is a derivative because swap is part of derivatives. So what that means is that what we have here is a derivative. And then the next thing is that is it a debt instrument or equity? Now, derivatives are derivatives, they are not debt instruments. So what we have there is a financial liability and we have our derivatives. Debt instruments are separate from derivatives. Okay, so the next one is staff advances. Try this before we move ahead. Okay, we are back. Staff advances. Remember, we said that a staff advance is a situation where a company gives funds in advance to its employees for the employees to make expenses on behalf of the business. And so the business is not expecting cash back from the employee. The company is actually expecting the employee to go ahead and make a purchase for consumption purpose. And so staff advances does not require receipt of cash. And as a result of this, staff advances are not financial assets. And if they are not financial assets, then there's no need for determining whether they're derivative or non-derivative, because it doesn't matter. That's pretty much it. Then the next one is staff loan. Staff loan simply means that cash has been given to your employee for personal use, and you expect the employee to pay back cash. And because of this, what you're expecting is a financial asset. Now, the next thing is it a derivative or a non-derivative in terms of nature? It is a non-derivative because there's no indicator that it's a derivative. They are not talking about it being linked to something. And so what we have is a financial asset that is a non-derivative, and that is also a debt instrument. Okay. And lastly, you'll be looking at loan issued that is linked to an index. We mentioned that when you issue a loan, it's more like borrowings, that you are collecting money with the promise to pay back in the future. And so what you have is a financial liability. In terms of nature now, is it a derivative or a non-derivative? Now what you have here, we call it an embedded derivative. It is a debt instrument as well. So that's pretty much it about the nature of financial instruments. You can go through this list all over again and try and familiarize yourself with how it works, so that by the time we get to the advanced classes, it will be easy for you to breeze through it because you already have this basic knowledge. I'll see you in the next